Hey there, everybody. Thank you so much for joining us for the workshop today in Cyber Insurance 101, what every business owner needs to know but isn't being told. And we have our friends Andy Runyon and Will Brooks from our partners FifthWall Solutions, and Linda Hansen, our Director of Operations, who's pulling all this together. And yeah, we're really excited to hopefully everybody's going to learn something new today.
Good morning, everybody. All right.
All right, and I'll turn it over to you, Andy.
All righty. Well, guys, I appreciate you joining us this morning. I'm Andy Runyon. I'm our partner risk advisor here at Fifth Wall, and I spend my days and weeks meeting with MSPs and their clients across the country and talking about risk management, risk mitigation, risk transference through insurance, how they're related, how your controls, your investment with the CARU can benefit you in our cyber insurance marketplace. So we're going to dive in here in just a minute. I'm going to let Will introduce himself, but we're going to talk you through some things that cyber insurance is a hot topic for everybody these days. But there are some corners and caveats in the market that you don't know unless you know, and we're going to try to dive into some of that today. Will, do you want to introduce yourself before we get going?
Yeah, my name's Will Brooks. I am the channel chief at FifthWall Solutions, and I always tell people that is a totally made-up title that doesn't exist in any other industry, but this one. So, yeah, we're probably anomalies because you probably don't talk to people in the insurance world who are this excited to talk about insurance, but we're excited to do so today. There's a lot of Andy and I were geeking out yesterday just preparing for this and coming across statistics and all this kind of stuff, and we're like, man, nerding out over this. So we're excited to go through this. Thanks for bringing us on.
Yeah, and I love that you're here, and I love that you're nerding out over this because we get a lot of questions about insurance, and insurance is a regulated industry. So as technology advisors, we can't tell people what level of insurance they can have, but we love having this partnership because as experts, you can actually help people figure it all out. So I'm looking forward to learning a lot today.
That's it. Well, let's get rolling.
Before we get started. Can we do polls or anything, Ann, or is this completely they're just listening? They can't chat or ask questions?
We have everybody on listen only mode. We could program in, I have to program in a poll, and I just switched laptops, so it probably...
I was just wondering if they're able to ask questions. Like, can they type questions?
They can put in questions. Yeah. And a lot of times people will email us. So yeah.
Okay,
so
perfect.
watch for that. But and then
folks can use the chat session in here.
Yeah, so that's my one thing here as we get through this. Andy and I can riff off each other and just talk about cyber insurance for an hour because, again, we're nerds. But if you have questions about things, please put it in the chat. We can definitely address those as we go, or email Ann or Linda, and they will bring them up. Don't feel like you have to wait till the very end if there's something that you're seeing that you're like, I'm going to forget this question, so make sure you ask it. Go ahead, Andy. Sorry.
Let's get rolling. All right, let me get in here and show from the beginning. Are you guys able to see the slide there?
Oh, yeah.
Perfect. Okay, well, my background is in education and history education, so you probably didn't expect this, but we're going to get a short history lesson to start today, right? Ann posted some really cool stats yesterday to prep for the webinar around the Sophos report, right? That was released in July 22, and we'll get to those, but I want everybody to have a baseline understanding of cyber insurance and where we came from to get here today, right? Guys, if you go back prior to 2020, there may be some business owners or some decision makers on the call today that have had cyber insurance since before COVID. If you have, right, you'll remember a day where the app was 4 or 5 questions. It was, what's your name, what's your address, maybe asked revenue, maybe how many employees. There were a couple that asked, like, are you in the marijuana, adult film, or casino industry? Like, but that was about it, right? There were no additional questions about controls or risk. And we jokingly, the episode of Oprah, you get a car, you get a car. That was what was going on with cyber insurance. You get a policy, you get a policy. $800 here, $900 there, right? Well, COVID happened, right? 2020 and 2021 rolled around, and cybercrime hit quote unquote Main Street. And what we mean is cybercrime, particularly ransomware at the time, shifted down to small to medium-sized businesses. And what that meant is that insurance carriers suffered major losses. Very quick insurance nerd squirrel chase, very quick. Loss ratios for an insurance company, they generally want those to be between 30 and 60% to be solvent, be profitable, and everybody make their money, right? there were loss ratios by individual carriers in the 2 years around COVID that were reported at 114 to 120%. That means that every time somebody paid in $1 of premium, they were paying out $1.14 in claims, right? You don't stay and play that game very long. You can't. You won't have a business, right? So we started seeing the creep in of questions about MFA. Do you have MFA? Yes or no? What about backups? Do you back your data up? How often do you back it up? Things like that, right? Post-COVID.
Real quick, Andy,
Go
just
ahead.
so we
Yeah, fire away. Yes. Yep.
Loss ratio, in case you don't know what that is, just real simple. An insurance company measures how much money they pay out versus how much money they take in from premiums. So like if you
There you go.
were an insurance company and you collected $100 for your premium, which is really low, but let's just use it for easy percentages, and then you pay out a claim of $60 to help the client, your loss ratio would be 60% because you took in 100, paid out 60. So again, to Andy's point, they were bringing in less money than they were paying out. That's a problem.
Right. Right. So what happened post-COVID? Thank you for that, Will, by the way. Post-COVID, we saw a major shift in insurers and how they approached and underwrote business, right? A hard market means higher premiums, lower deductibles. Essentially, a lot of the carriers that had big skin in the game pre-COVID were needing to claw back funds to say so, right? So we saw less appetite. We saw premiums go through the roof. Some clients saw 70, 100% increases in premium through this time. And I know you guys were around. You guys were seeing clients coming in going, "Oh my God, what did I do? Look at my cyber insurance premium. Help!" And then we also saw the entrance of advanced controls. Some not necessarily what are considered advanced now, but a lot of small businesses in 2022 had no idea what EDR was. They knew what antivirus was, but they didn't know what EDR was, right? And we started to see what was called a long form application. If you've ever filled out a cyber insurance application that you've opened up from your insurance agent and went, "Oh my God, this is going to take 3 hours," that's a long form application, right? What's the difference between MFA and MDR and EDR, right? Those questions started entering to small businesses. And then where we're at today is the market has stabilized a little bit. We have what we call a selectively hard market, meaning that if you have the right controls and you have the right access to market, cyber insurance is not that bad, right? You can get a good policy for a fairly reasonable premium. There's more appetite now. People have figured out how to write business and stay profitable. But if you're a higher revenue or you're in a sector that has a ton of risk history, right, you're going to need some of those advanced controls, MDR, privilege access management. They're asking you about incident response plans, things like that, right?
And I don't know how many people I don't know how many people on the webinar themselves represent small businesses or medium-sized businesses, but one of the funny things is people often ask us, "Hey, what's one of the most at-risk industries?" Right? And you have the broad ones: manufacturing, construction, like these people who think these industries that think, "Oh, well, I'm working with my hands. I'm in there, I'm building, I'm constructing, I'm on a factory line, whatever." It's like, what's my cyber risk? And they get hit all the time because that's that mindset. But a lot of small and medium business owners, that massive broad industry chunk is actually one of the highest at risk, because and we're going to get to that, but I just wanted to kind of preview that because you don't typically think of yourself as an industry when you're small, medium business, but you are. And just the way that cyber criminals attack, the way that they go after things is it's not pinning a target and saying, "I'm going after this person." It's like casting a wide net and saying, what can I catch today? So just something to keep in mind as we work through this.
Very good.
Yeah, and we see that, a lot. A lot of the reports are going to show that most cyber attacks are just indiscriminate. They send out a million emails. Somebody's going to click on it. And we get questions like that all the time. If it gets into insurance, we refer the conversation over to you. But yeah, and you also need a decoder ring for the applications.
No doubt, no doubt. And that's, guys, as we move forward, FifthWall is bringing a product to market called UKON that's going to help demystify some of this. It'll be available this summer. So if you see that logo as we go through the slide today, that's just a reference to the product that'll be available this summer. Will, do you want to talk a little bit here about, and we'll toss it back over to you. I spoke a lot on the history. We see at FifthWall a lot of similar questions come in regularly. And Ann alluded to this with the statistics from the Sophos report. Will you talk just a little bit about some of the things that the general small to medium-sized business struggles with when it comes to purchasing insurance?
Yeah, So first of all, I want to look at those first two questions you have there, Andy. And one of the things I coach people on when it comes to cyber insurance and determining what the right coverages are and limits and all that kind of stuff is oftentimes if you have to ask the question how much, whether that's how much should I have or how much is it going to cost, the answer is always it depends, right? That is that is the most frustrating answer because it's not direct, right? You're looking for a direct answer and you say, how much insurance do I need? Well, let's look at that third question. Which controls should I prioritize? What should I invest in? That right there tends to be one of the leading factors. Andy brought something up in the timeline prior. He said, hey, we're in a stage right now that if you have access to enough markets, you can actually find really good coverage at a fairly affordable rate. The problem is if you're not secure enough, if you don't have what I like to call optimal security, like you could check the boxes and say, well, I've reached the minimum height. I'm tall enough to ride this ride. I can go get a cyber insurance policy. What you're really setting yourself up for is minimum market access with higher pricing. The better your security is, the more carriers are going to say, oh man, this risk isn't just a decent risk. This is an optimal risk. I'd be stupid not to write coverage for this company, right? Like that's the mindset of what a lot of these carriers are doing. So I think one of the biggest challenges small businesses face is they're often looking at cost and limits on a cyber policy, and they're not thinking how those things work together with their cybersecurity. If you have good security coverage, you're going to have better access to better pricing, better limits, better coverages, and all that kind of stuff. And they really speak to each other. And that gets to what you were saying before, Andy, of the full concept of managing your entirety of your risk, not just one piece versus a different one.
Perfect. Well, let's dive into that first one and let's look at probably the question that I feel like small businesses, especially small businesses that are growing, struggle with the most, right? How much insurance do I buy? I've got $1 million of general liability on my BOP. I've got $1 million of work comp. I got $1 million, of work business auto, right? So I just go get $1 million of cyber, right? I mean, like, don't I just copy and paste those limits into cyber? Now you already said it depends, right? How do I know if let's use a $50 million manufacturer? I've got that example coming up here in a second, right? If I'm a $50 million manufacturer that 10 years ago was 20 million, and I've been on a straight growth model for the last decade, and I've had a cyber insurance policy since before COVID, how do I know if my $1 million policy that I established in 2018 applies to me in 2025?
What do you mean by applies to me?
When I watch that, I mean, how do I quantify my risk? Like, if I'm a business owner, how do I know if enough is enough, I guess is what I'm saying.
Yeah, I mean, well, you need access to data, which is challenging in and of itself. But the three things you're really going to think about are your industry, which we brought up before, your revenue,
Right.
and your security
Right.
posture, right? If
Right.
your revenue is really high, like Andy brought up, a $50 million manufacturer, well, manufacturers are already high risk and they have a loss history, a pretty significant loss history. $50 million is a lot to lose for your business operations. And then on top of that, if you don't have good security, you're looking at you brought up EDR before. Like one of the benefits of endpoint detection and response, managed detection and response, is that when a cyber criminal works their way into your network, it shuts the door, it kicks them out, right? Like that's the goal. And even though there may be a little data leakage, even though things might happen, it's much better to get them out of there quickly and cut off their entry point than to let them sit on your network for 3 weeks, right? Without you even knowing, and slowly siphoning everything, finding all the back doors to your network, figuring out where your payroll information is. Like, we don't want that. So the faster you can get them off their network, the less you're at risk of losing. That's how these things play off of each other.
That's right. And that's why when we look at this tool here through UKON, we produce a cyber risk report for every business that takes into factor those things, right? It takes into factor your revenue, your sector, your controls. And the reason that it's not a hard, a set number, right, is those things may fluctuate. Every loss has its own thumbprint. But it is helpful in 2025. I tell people all the time, COVID was bad for a lot of reasons, but COVID produced us a lot of data that we didn't have before. All of that cybercrime gave us an idea now where we can say, hey, going back on 5 years trailing for a $50 million manufacturer that's down for 15 days, we've paid out a lot of these claims. This is about what we've been paying out, right? And there's the ability to guide them to, hey, $1 million may have worked for you in at 20 million in revenue in 2018, but based on your growth, your revenue, what's going on in your sector, the modern approach to cybercrime, right? You probably need 3 to 5 million, maybe, right? All right.
Yeah, that's a
So
really interesting calculator. I had to jot down some notes there because your revenue's changing as a company grows, and your risk is changing.
Yep.
that's it.
So,
That's it. So as that maturation happens and that fluctuation happens, we believe, at least on an annual basis, you need to sit down with your MSP and a cyber insurance specialist prior to that insurance revenue and go, hey, what applied last year? Does it still apply this year? Right? We feel like that, I mean, at a minimum, that deserves an annual conversation about 3 months out from renewal, right? Okay, so now if we're going to go out as a $50 million manufacturer and we're going to purchase insurance, and we said 3 to 5 million, right? How much does that cost, right? I don't know. I've had the same agent for the last 10 years, 20 years. I love him. I play golf with him on the weekends. He's not real great at cyber, doesn't understand, can't talk the lingo, but I trust that the guy's not trying to, steal from me. How do I know that I'm paying fair market price, right? And Will, you alluded to this while I pull this up. Do you want to talk just a little bit about over the last couple of years how those controls have directly affected, particularly MFA backups, endpoint detection, how those things directly affect pricing in the market on the front?
Yeah, I mean, there's two sides to this, right? There's we often get the question, hey, what security controls are going to directly, what percentage am I going to save on my premium if I implement security control X, right? If I'm going to implement this security control, what percentage am I going to save? And unfortunately, this isn't Geico. Cyber insurance is the Wild West. And the problem with that, we represent over 50 carriers at FifthWall. And one of the issues there that we see is that every carrier operating independently of each other has led to a place where there's not really any standardized savings right now. Now, you will see savings, but what I brought up before is typically when you better optimize your security, it's not that you're going to see a reduction in the pricing with your current company as much as you're going to have more options opened up to you with other companies. And I think that's really the key component of what we're looking for here. But there's another piece to this, right? So Andy's talking about 3 million in coverage, right? Like if you're looking at your business, I'm a small business owner. I just hit 3 million. I mean, I hit 5 million, whatever. I mean, you're doing great. If you were to have an incident and you were to see, if we were to run risk quantification on your business, and we saw, oh, well, I mean, on average, someone in your industry with your revenue, with your current security posture sees between like 2.5 to 3 million in losses due to a cyber incident. You say, that sounds crazy. Well, if you get the right security in place, what that's going to do is bring down how much you could potentially lose due to an incident. So again, I brought up EDR before. Like if you don't have EDR and you're at risk of losing 3.5 million, but by implementing EDR, now you're only at risk of losing 1.5 or somewhere between 1 and 1.5. Well, now you no longer need a $3 million policy. You'd be good with a $2 million policy. And that's a big chunk of savings, right? Like it's that kind of way of thinking where if I can bring my risk down, if I can bring the potential for loss down, then I only have to transfer. I have to transfer less to the insurance carrier, which means I'm paying less for my insurance. And I'm a better risk because I have good security now. So it's like that kind of, it all plays off each other.
Perfect. And to refer back to some of the stats that Ann posted yesterday, in that Sophos report, it talks about roughly 63% of businesses when they filed a claim weren't made whole in that claim because they didn't buy enough insurance. So what we need to do on the front end is we need to try as best as we can to quantify risk, place the appropriate amount of limit, tie that, make sure we're getting credit for the security investment that we made so we don't pay a lot over that, right? And then over the next 10 years, make sure that we're on a growth model to where we address that every year. One of the things, if you can see the graph that's presented now, to what we're talking about here around price, for this $50 million manufacturer, if let's say they went out for 3 million, right? We know from our market access, we'll mention that we have access to over 50 carriers, right? There are carriers that are taking $50 million manufacturers with 3 million in limit, around $48,000 a year in premium. That's the top end of the market, right? Now, there are other carriers with excellent controls that are taking that same manufacturer at that same limit for $18,000 to $20,000, right? So what this graph shows is if you start in 2025 at the high end of that market 45, 47, 48, right? And you don't have great market access, and you have a 15% increase every year. Insurance gets more expensive. Let's call it 15. That's very modest for what we're seeing in some markets today. That's your brown line. Versus if you started with great controls and good market access, if you started at 18, 19,000, and because you had wonderful market access and an agent that knew what they were doing, you ended up realizing a 10% increase over the last couple or the next 10 years. Oh, sorry, I popped out of that. Look at the difference in savings there, guys. And the point is here, I mean, again, this is a cost analysis. This is an example. But what we want you to take away is, like, regardless of the size of your business, right? Regardless of how much you buy, the right controls, the right market access, and working with somebody who's actively invested in working with your MSP to keep your premium down, you can absolutely throw money away if you're not taking a proactive approach to this. And if the larger your business is, the more that number could be, right? Will, did you have something to add there?
Yeah, I mean, can you go back to that slide? Because I think that's a really,
sure.
so something that and just kind of thinking of the post that you put up from Sophos on the concept of claims not being paid out, right? And I want to kind of harp on that a little bit, is when you start to see trends like this, say, okay, I have not reevaluated my security posture. I've kind of just maintained what I had, and therefore I'm stuck with the same carrier who continues to write me, but they just keep jacking their rates. They're going up, they're getting expensive. So what's my solution? Well, I'm not going to reassess my security posture. I don't want to pay more for security. Instead, I'm just going to go find a cheaper insurance policy. And then what they end up doing is finding a cheaper insurance policy. Great, you've got cheaper insurance. Guess what? Oh, I just did fireworks somehow. You got cheaper insurance. I don't know how that happened, but I like it.
I think it was the double thumbs up, maybe.
And
I dig that.
I don't know.
Wow.
Great, you got cheaper insurance, fireworks, right? But the problem is that insurance policy is probably covering you for significantly less. Like I said yesterday, we were geeking out on data. Some of the things I found, 44% of cyber insurance claims are straight up denied because businesses didn't meet the security requirements of those policies, right? So that's the first piece, and we're going to get to that. But another important one is in 2022, there was a survey done. Only 19% of organizations had cyber insurance that covered them for more than $600,000 in losses. So think of it, right? The average ransomware is somewhere between like 3 and 4 million. And that's spanning massive amounts of
all
industries.
businesses.
So you can't live on like 3 million and say, oh, you're going to lose 3 million due to a ransomware incident. But we speak in averages because that's how we work. But anyway, the average policy for a small business, I'd say hovers around like that 1 million, 2 million limit is what it should be. But based on this, only 19%, that's almost a fifth of organizations carried more than 600,000. So only a fifth of all the organizations that took this survey. Now that becomes an issue because what that tells me is something like this. Oh, my insurance got so expensive, I'm just going to buy less insurance. Then you have an incident and your incident hits that average. It's like 2 million, 3 million in losses because it's not just the ransomware. It's all the other stuff that comes with an incident, which we're going to get to. But you didn't have enough and it's not going to pay out now. And now you run into these issues like, well, insurance really smacked me over the head there. What are they thinking? What are they doing? And it makes me think as an insurance guy, right? You sometimes see those commercials with like talking head testimonials where like, I worked with this lawyer, LLC, something, whatever, and they helped me get 90 times the amount insurance would have paid out. And it's like, that's not because insurance is trying to swindle you. It's because you bought terrible insurance. That's the problem.
Yeah.
So if you're not buying enough insurance, you can't complain when a company says, well, we're only going to pay you 600K because that's all your policy is for. Like if you're not doing the work to get the right security, you're not doing the work to get the right amount of coverage to fit your risk, which is what this is all about, then we can't be upset when the insurance carrier says, well, I'm only going to pay you as much as your insurance policy that you paid for will say I pay you.
That message is so important. So we based all of our security recommendations on the NIST cybersecurity framework, and I've had so many odd conversations. And Linda does reviews with our clients. We call them technology business reviews all the time. We go over the security, And this math that you're showing here is so important because you have to understand your coverage. And I've had conversations. We had somebody call in. They had questions about what all the terms meant. And at the end of the call, I was realizing they didn't even have a cyber policy. They thought they did. They didn't even have one. And like you got to do the work. So, and I love multivariable math. So this is awesome.
No, and you know, cybersecurity in and of itself, technology as a whole is exponential. And Ann, you brought this up before. And Andy, I saw the next slide, cyber controls, which is why I'm getting to this, is just because you were a good risk 3 years ago, like you had the security that a carrier says, hey, you're good to go, we like it. Oh, I got thumbs up now, cool. So I think I must have my Mac reactions on. How do I turn those off? Okay, they're off now. Okay, it's not gonna.
No fireworks. Yeah.
Sorry about that, folks. Sorry to be distracting. So just because you had good security 3 years ago doesn't mean you have good security now. And I love to hear, Ann, that Linda, you're doing these evaluations on a regular basis to say we gotta make sure that this roadmap is being laid out. That's the beauty of following a framework like NIST.
Absolutely.
But at the end of the day, right, if you're not following that trend that, hey, if technology is exponential, then the way that criminals are utilizing technology to perform cyber incident hacks, whatever you want to call them, ransomware incidents, whatever, then their ability to employ those things is also growing exponentially. I mean, think of AI, right? I mean, 2 years ago, 3 years ago, before AI was super mainstream, you would get a really, really, really broken English email that was just obviously an attempt to phish you.
Right.
I could easily generate an email using ChatGPT today and mail merge it and send it out that way, and it sounds way cleaner and way more legitimate than it used to.
Yeah, and we're seeing that in the wild. Like, we're trying to give small businesses a fighting chance, and we had a situation. It involved a relatively new employee. Just run-of-the-mill phishing email was sent out, and designed to. It doesn't have any trick words that would, tripwire a certain security controls. But because they had MDR on the email, there was an attempt to log in. The user had inadvertently divulged their credentials in this, but because we had MDR in the email, just shut down that account immediately. And had they not had that, somebody could have been in there just poking around their email for as long as they wanted. And we're just really trying to get the small business community to listen to all this, because there's simple and affordable things you can do that make a big difference, and you got to understand your insurance and your risk. So anyway, keep going.
That's great. It's a perfect segue. But by the way, if you need proof that marketing works, as you guys were talking about insurance not being the right thing, my brain kept saying you needed Batman, but you had Bateman. So I don't even know if we can say that here legally, but I've watched those commercials with my kids over and over again for State Farm. So that was exactly where my brain was at. All right. So when we talk about those controls, Ann mentioned MDR. What are the primary controls, right, that insurance carriers are looking for small businesses, right? Where can I get the most efficient spend out of my investment with Karu, right? MFA, backups, patching. We want that patching. Insurance wants that patching to be at least on a monthly cadence, right? Antivirus, EDR, MDR falls under the same, in some type of endpoint detection. Obviously, we would prefer MDR over EDR because of exactly what Ann talked about just then, right? Security awareness training, firewalls, and email security, right? Those things are considered to be basic. If you're looking for ways to spend with the Karu on cybersecurity to make yourself look better to the insurance market, there's your key right there, right? Anytime you make investment on those basic controls, you're going to open yourself up to better premiums, lower deductibles, more market competition, which if we go back, you're placing yourself more down here on this black line than you are on this brown line, right? You enter the market at a lower premium, and through the adoption of those controls and those annual or quarterly technical business reviews, right, and the annual look at cyber insurance, you're placing yourself down on the black line there. Will, before we run, there's been a lot of talk today about claim denials, right? It's a common thing that we hear. It was very heavily mentioned in that Sophos report, Ann, that you posted, right? About, I had an incident. I reported it to insurance and my claim got denied, right? And I think hopefully if you've been paying attention, you probably know where we're going on with this. What's the difference between a denial and just not being fully made whole, right? There are differences here. How do those two things work?
We like to live in a very black and white world, right? It's like,
Right.
oh, insurance didn't pay out what I wanted them to pay out, and therefore I was denied.
So
Right?
I was
Like
denied, right?
that's
Yes.
that's not a denial. Actually,
Right.
I have a lot of friends who are cyber underwriters, and I've had conversations with them where they say, hey, look, there's a lot of times where we're just going to negotiate the amount we pay out because they're not covered to the limit of insurance that they want to be. They're covered to some limit that they purchase. So we have to have those conversations. We've done webinars in the past where there were two. Wes Spencer, who was the channel chief before me, he did two kind of side-by-side stories. One of them was a flat-out claim denial. You had a company who said, we have MFA. They had an incident. Forensics went in, determined, hey, you know what? Actually, you did not have MFA. You straight up, well, I'm going to say misrepresented because that's the legal term, but you lied. You lied on your application. You said you had MFA and you didn't, and you had a cyber attack because of it. We're not paying out this claim. That is, the judge just threw out the case. It's like, nope, denied. This makes sense, right? You didn't uphold your end of the bargain. Insurance is a contract, and you did not uphold your end of the contract, and therefore denied. A different incident, and for whatever reason, my brain goes to Circuit City, even though it has nothing to do with Circuit City that doesn't exist anymore. I don't know why, but it's not Circuit City, but there's some company that had an incident.
Place.
And remember, that was like my favorite store before Best Buy was a thing.
Yeah,
now,
exactly.
They used to have they had an incident. This company, this business, had an incident where they succumbed to it might have been invoice manipulation. It was some sort of social engineering. I'm not sure what it was, but they ended up paying out $600,000 in funds because they got tricked. And they said, oh, well, we have $1 million cyber policy. We're going to be fine. We'll just file a claim. It's all good. And then they file the claim and the carrier writes them a check and it's only for $100,000. And that's because their social engineering sublimit was only $100,000.
Okay.
And they ran it. So they weren't denied. They were just paid for what their limit of insurance was for that particular type of incident. And that's that phrase at the bottom that says not being fully indemnified. Here's another defining of our terms, insurance language. Indemnification is what insurance policies try to do, which basically means you're here, you have a claim. So you're here, you have a claim or an incident, you're here now. Insurance wants to bring you back here. It doesn't want to bring you here, it wants to bring you here, right? It wants to bring you back to where you were. And that's what indemnification is. The problem is if your limits aren't high enough, you can't be indemnified if you lose more than what your limits will allow for.
Perfect. And that's so a couple of things that I want to toss in here because you're exactly right. That's what I wanted us to dive into. Number one, every insurance policy has a deductible, right? Every one. They typically float between $5,000 and $10,000. Some have, if you have poor controls, some will have a $50K or $100,000 deductible, right? So, and part of the stats that you posted yesterday said that 1% of respondents said that cyber insurance paid out 100% of their claim. The reason that most people probably responded that way is they don't understand how their deductible works. They may have opted without knowing necessarily, they may have opted for a $50,000 deductible to drive price down, and then they had a claim, and they're like, "Well, I wouldn't pay 100% out. I had to still on the hook for 50 grand." So number one, there's a deductible there, right? Number two, there are caveats of coverage, and these two, Change Healthcare and CDK Global. If we go back to 2024. These were two major events in the cybersecurity world, right? Two major breaches. A very common claim denial, right, is for third-party loss. Now, let's say I am a car dealership and I have my F&I tool and my CRM tool. My entire business model is based off of CDK Global being up and running when I get to work, right? I go in on a Monday, I don't have a breach, but the vendor does, and I can't do business for the next 10 days, right? Now, should cyber insurance pay for that? Yes, it should, when it's written correctly. It's called dependent business interruption or dependent network interruption, right? Now, you go buy fly-by-night cyber insurance, you don't understand your coverages, you have poor controls, and things get eliminated. Dependent business interruption may not be a part of your plan, right? It may not be covered by your cyber insurance. There were a ton of healthcare entities last year when Change Healthcare hit, pharmacies, dental offices, right? There were a ton of car dealerships when CDK Global hit that went, I can't do business. This is a breach. I'm going to file my cyber insurance, and their claim was denied. And the reason was because was that the policy was not written in a way that covered that type of loss. Their risk was not qualified by their agent and by the person who placed the policy. And therefore, there was a denial because there was a gap in coverage, right? So we want to make sure, like, as we throw stats out there about denials and claims and things like that, as a buyer, understand the difference. Not being fully made whole, that comes from not buying enough insurance. Will mentioned the average, less than 1/5 of people have $600,000 or less. In that same report that you posted, Ann, the $0 to $10 million bracket, right, in revenue, their average ransomware event all in was $1.2 million. Think about those two numbers next to each other. Less than 1/5 have 600K or more. 1 to 10 million average cyber event, 1.2 million. There's a major gap there, guys, right? So there's a difference between not being made whole because you didn't buy enough and having your claim denied because coverage wasn't there or because you misattested. And we wanted to just kind of clarify that today.
Yeah, that math is so important. And I remember the CDK Global because I happened to be bringing my car in for service that morning, and they sent me home. They were down.
Well, let's pause there and let's kind of work towards. I know time wise we're Q&A, closing remarks. Will, anything I know we've covered a lot of territory today. Anything that you want to add in closing?
Well, yeah. So I want to harp on this for a second. I don't want to take it. You guys can stop me if I need to. I don't know how long we're supposed to be going, but real quick, this concept I think is crucial because one of the largest pieces of feedback you often will hear from small business owners is, I'm too small to be hacked. I'm too small to be a target. I'm too small to be hacked. But what if I told you being hacked isn't the only thing you should worry about, right? Yes, maybe first of all, that's not true, right? A lot of times you get these misconceptions and it's like, well, maybe you're just not big enough to make the news, which is why you never hear about it, right? So that's a pretty common response. But what if I even grant you that argument? I'm going to grant you, okay, sure, you're too small to be hacked. It's incidents like this with Change Healthcare, CDK Global. We're a small company. We use HubSpot for all of our sales. But guess what? HubSpot is massive. And there are companies that are way larger than us that use HubSpot for their sales. And if HubSpot were to have an outage, there would be a lot of companies really suffering with their ability to work deals, close deals, sell, and all that kind of stuff, right? So as a small business, chances are you rely on at least one or two vendors to do whatever it is, whether it's payroll, whatever it is you're doing. And if those vendors undergo a cyber attack, one, you may not be able to do your day-to-day operations. Two, you may have data in their systems that the threat actors now have access to, and therefore you could potentially be culpable for the loss of that data, right? So there's all these layers where it's not just about your systems directly getting hit with a cyber attack, it's all the other stuff around it. And then you say, oh, well, I'll just buy a cyber insurance policy. Andy's up here talking about third-party dependent network interruption and how important that coverage is. I'll just go out and buy a policy that does that. Well, guess what? You're not going to be able to find one if you don't have good security first. And that's how all these things work together. It's not just about going out and buying a cyber policy. It's not just about turning to Ann and Linda and saying, hey, you can protect me so I'm safe. I never have to worry about a cyber incident ever again. No, what Ann and Linda are doing is reducing your risk as much as they can. And then you're transferring the rest to an insurance carrier. That's what risk reduction is all about. You're reducing that risk, and then you're saying, all right, there's a bit of risk here that I cannot eliminate. You just can't. You can't get rid of it because it's impossible to protect from 100% of cyber attacks. I'm just going to throw that out there. It's impossible. So if it's impossible to fully protect 100%, you got to be able to transfer the rest to an insurance company. And only by protecting yourself and reducing your risk as much as you can are you going to be eligible for a policy that covers you from something like this, where you have a third-party outage. Another one that we didn't put in here is the CrowdStrike incident that happened last year. CrowdStrike is a global international MDR provider, and they went down. It wasn't due to a cyber attack, or at least that's what they say, right? For whatever reason, it went down. And actually, I'm not going to get into the reasons why it went down. It's actually really stupid, but it's it went down for employee error, and it's not good. But anyway, it went down, and even airlines like Delta literally ground to a halt, no pun intended. They could not operate, right? And there were businesses across the globe that could not operate. And if CrowdStrike didn't get their stuff together and fix it within a set amount of time, you would have started to see cyber claims rolling in. And that's where we have to think, okay, cyber risk is so much bigger than my tiny bubble that I live in. We live in the age of the internet. Everything is interconnected, and therefore our insurance coverage, our cybersecurity needs to reflect all of that. So that's my 2 cents on this topic.
And any questions from the group or from you guys? I mean, I know we've covered a ton of real estate today. Any questions out there about anything that we've discussed?
Yeah, and as we get close to wrapping up, I'm just thinking as you talk about that, like folks like diving in and actually understanding, and I love, Will, I jotted down notes because we try to reduce the risk as much as possible. There's no such thing as 100% security. You can transfer some of that risk, but you have to actually understand what your policy covers. And I know in our reviews, and Linda does these several of them every single week, but we still get people who say, oh, I don't need insurance because I'm working with you. Like,
Right.
Okay, yeah, we're patching, we're doing a lot of things, but you still have risk. And then there's the other camp that says, we're working with you. We don't need insurance, or we have insurance. We don't need any security, which boggles the mind because, okay, so you lied on your application or misrepresented yourself on your application. You got to understand the questions that you're answering, and that's our whole mission, to try to empower SMBs to make good decisions, nonprofits. And in our line of work, we see all these situations. We've seen the companies, they're not going to make national news, but one came to us to strengthen their security after they had a major cyber incident. Yep. They did have cyber insurance that it covered a lot, but they still had to take money. Fortunately, they had cash reserves. And I guess one question too is in terms of like if you have the right coverage or planning to maybe have some cash to fill in the gaps, what can you expect from being able to post event? The insurance company is going to want to do forensics. They're going to want to check that you actually did not misrepresent yourself on the policy, and it's not going to be instantaneous that you're covered. So if you're the unlucky business and you have a cyber incident, can you walk through what happens after that in terms of dealing with your insurance?
Yes, ma'am. And I'll take let's split this up a little bit here. I'll take the pre-breach planning piece of this, because this is a thing that this has been my soapbox for over a year now, right? If you're a small business on the call right now, or you watch this after we're done when it's recorded, and you don't have an offline customized incident response plan that addresses ransomware, funds transfer, theft of invoice manipulation, and third-party outage separately, you needed one yesterday, right? So first of all, there should be some pre-planning going on that involves insurance. You should have an IR plan. You should tabletop that plan. It's good to do a pen test annually to kind of see where my cracks are in my network, and then to make plans around insurance. If we have an event and it looks like this, if it's a ransomware event, here's my policy number, here's the claims hotline, and set that aside and practice it beforehand. If somebody pays a bad invoice, right? We need to report that to IC3.gov, right? We need to get banks involved. We need to call back those funds, hopefully within 48 hours to where there's not a claim. Now, if it goes past 48, we need to make a claim. Here's my policy. Here's my policy number. Here's the claims hotline. So for me, to make sure, and I'm not trying to dodge the question in any way, but to make sure that the post-claim response goes as smoothly as possible, you need to practice it and have some idea beforehand in order for it to move as smoothly, or you're going to be out there sailing in uncharted waters, right? I'm a baseball coach, as you can see by my background, have been for 22 years. It would be like us going to a game and have not had a single practice before the first pitch started, right? We would be massively unprepared. So, Will, do you want to add anything about post-claim and, kind of generally how the carriers respond there?
Yeah, it feeds into an important concept is just to paint the scenario, you're a small business and you get to your office one day and you see that dreaded splash screen of a skull and crossbones that says, "We have all of your data. You must pay us X amount of dollars or we're going to leak it to the dark web," or whatever. First thing you do is call Linda and Ann and say, "Hey, this is a problem." I mean, hopefully at this point, Linda and Ann already knew and already took care of the problem. But if you didn't listen to them when they said get the right security in, now we have a problem, right? So you reach out to them and say, "Hey, get me back up online. This is a problem. I need to work," right? And that in and of itself, that it's scary, it's stressful, it's anxiety inducing. To Andy's point, if you don't practice the incident response and this does happen, it's going to be even worse. You're going to be going through something that is uncharted to you. And what we're trying to do is say, hey, we do not want the first time you go through an incident to be, or the first time you go through any sort of incident response be like live scenario here. Like let's make this let's practice this. Let's practice the cadence. Let's know. And one of the important pieces about practicing the cadence and why we bring that up and mention this is the first thing insurance is going to do. Let's say you have an insurance policy. Great. I'm going to call insurance. I'm going to get them involved. And the first thing they're going to do is don't touch anything. Your network is now an active crime scene. And that is going to conflict with what you're asking Ikaru to do, which is, hey, get me back up online. And they're going to say, well, we can't until insurance does their investigation. We can do things. Maybe you've sandboxed them. I don't know how maybe you're able to get a dummy network up, but the fullness of your system will not be back up online right away. Think of it this way. You're a housekeeper at a hotel. You walk into a hotel room and there's a dead body on the floor. You're not going to start cleaning up and say, hey, that's my job. I got to clean up. If this thing's in the way, let's just get it out of here so I can keep doing my job. You're not going to do that. That hotel room is now an active crime scene. In the same way, it's hard to think of it that way, but that's your network when you're undergoing an incident. And so forensics needs to get in there. They need to do an investigation. You can't tamper with the crime scenes. You have to wait. This is why the average ransomware length is like between 14 and 16 days. A lot has to happen. They need to know what data has leaked, who needs to be notified. Do you have to do credit monitoring? Was there payment information leaked? Like all that information is important because guess what? You're on the hook for that too. And that's all stuff that cyber insurance policies will cover. But a cyber insurance company needs to know how much of it do they need to cover? Do they need to bring in these lines of coverages? And that takes time to investigate. So this is why the stress is so high, but we also need to understand if we can practice through this, we're going to know, okay, not only do we know that this will take roughly X amount of days, but we also know what we can be doing in the meantime to keep our business operating the way it can, right? There are coverages on a policy for things like income loss, right? So if you go 14 days because undergoing this incident, so you can't do your day-to-day business operations, well, you're probably losing income because of it. A good insurance policy is going to help cover you for that. It's going to cover you for things like reputational damage, like 6 months down the road, you have or potential prospects who you're talking to, and they're like, I can't do business with you because you underwent a cyber attack, or you have clients who are dropping off because you underwent a cyber attack. Carriers are going to help out with that too. They're going to help, they want to keep you whole and make you whole as you navigate what this cyber attack is all about. But it all takes time. So being aware of how long it can take, being aware of the routes you have to go, long-winded answer, practice it, know it's going to take more than just a couple seconds for Ann and Linda to flip switches. It's much more than that.
Yeah.
And Ann, quickly to add to Will's point there, just to reference something you said about like, hey, we use you guys so we don't need insurance. One of the great sarcastic answers to that is, oh, if you don't need insurance, you do know how to buy Bitcoin, right? You've got somebody on your lawyer has handled cyber events before, and you have somebody on staff that speaks both Russian and Korean, right?
Yeah.
Because all of those things are going to be in play in the event of a ransomware event. And guess who provides those things, right? Guess who provides the ransomware negotiator and a cyber specific lawyer and buys Bitcoin on your behalf, right? Insurance does, right? So,
Yeah.
There are those things that are part of the incident response that the average small to medium sized business never even considers. Those ancillary services come with insurance.
Yeah, and I don't know if you have another. Yeah. I don't know if you have another slide after this. So we're about at time. And I want to thank you so much because I jotted down a couple of notes. And as Linda said, yeah, we want to use that because I think it's, you give that example of the dead body in the hotel. Like, it's a gruesome thing to think about. And these cyber attacks, I mean, it's really horrible. It's very disturbing. It's very emotional for folks who have gone through it. It's a scary event. You're dealing with criminals. And, but it's not okay to kind of bury your head in the sand. The problem doesn't go away. So we just want, we want just people to be aware of, being able to have access to the right policies. And we offer this all the time. Anybody, when Linda does a review, Larry on our team, he's at extension 230. He will set up a meeting, and Andy and will go over and answer any of your direct questions that align to your business. And, in a lot of cases, they can find a really strong policy for you, or at least help you understand what you have and answer the questions and know those sublimits. So,
and one thing, Anna, that I do want to add to that is FifthWall will not create fires where there are none, right? If your agent has done a good job and they've got you with a policy that fits your need, we're not trying to come in and blow up the current program. We actually work with local agents, right? So there's if there are deficiencies, if there are things that need to be addressed by the market, we can do that. Worst case scenario, you bring us a policy and we go, hey, you're a $20 million healthcare entity with a $3 million policy, and it's got all the coverages you need. Your agent's done a great job. We'd love to help them broker policies in the future. So we'll meet them where they're at.
Yeah, and we really appreciate that. And I, again, we want to give local businesses a fighting chance to fight cybercrime. And we see a lot of things that don't make the news on our end, small companies that are being hit all the time in the local area. Nobody knows about it unless you happen to have a close friend who was impacted. So I just want to thank you so much. And folks, or somebody asked, this is recorded, so we're going to have it available. And wow, thank you so much.
And just one other thing, I recorded a video this morning, actually, and I'm going to post it to YouTube. That's all about what we talked about with third party. It's 2 minutes long, so I'll send you a link to that. So if anyone's like, I want to understand this third party component, it's a good little reminder on that. So I'll send you the link to that in case anyone wants that too.
Yes, please do. And thank you so much for taking the time with our community today. So we're going to sign off. Thank you so much.
Thanks, everybody.
Thank you, everybody.
Thank you, guys.
Bye-bye.